Welcome Accounting Boffins, you with Ashraf Patel, and the focus of our lesson will be cost accounting with a special emphasis on the ledger accounts, right? So you want to know more about cost accounting and the format of the ledger accounts, the place to be is with Ashraf. Don't fear when Ashraf is near. Okay, guys. Okay, so we look at in our previous lessons, we dealt with the other accounts. Our emphasis today is on the finished goods stock account. Okay, now here goes. Remember, when you walk into your showroom at the beginning of the financial year, you will find that there's still stock on the shelves, isn't it? It doesn't mean that because it was the last day of the previous financial year, all the items were sold. Certainly not. So therefore, when you walk into your showroom, I'm talking now the showroom. Remember, showroom, finished goods. That's where we're selling the goods that we have manufactured already. So when you walk in there, right, you've got items on the shelves, and that will be your balance at the beginning of the year. In other words, we're saying that your stock of your finished goods on hand at the end of the previous year, and obviously the end of the previous year becomes the beginning of the current year. Okay, so that is done and dusted, clear. You have a perfect picture of the stock on the shelves in our showroom, telling you that those were the goods that we did not sell. Okay. Now, if you recall from our previous lessons on the ledger accounts, we said that when we completed our work in process account, remember we transferred the goods that were completely manufactured from the work in process account into my finished goods account. My contra entry for that one would be a debit to finished goods and a credit to work in process. Remember from the previous lesson. Now, in your finished goods account, you now see that entry. Here's that entry whereby we've transferred the goods that we have manufactured from the work in process account into the finished goods account. Now, at this point, it is crucial for you to see the link between the work in process account and the finished goods account. Extremely important, right? In fact, if we go back, you will see the link from where? From your cost accounts into the work in process account, and from your work in process account into the finished goods account. So there's a flow of information, and that information is important for you to understand. Okay, now, in my finished goods stock account, once again, remember, this is a stock account, it's an asset account, okay? And therefore, the balance on the debit side was at the beginning of the year, which we've spoken about already. Okay, now, if you look at this cost of sales entry on the debit side of the finished goods stock account, what entry is that? Think about this here. Let's go back to a trading concern. I'm drawing now on your prior knowledge, something that you've done already on more than one occasion. When we have a debtor returning goods to us, okay, what are the entries that we process? Number one, you debit debtors' allowances, right? And you credit debtors' control, okay? The reason you are crediting your debtors' control, because your debtor doesn't owe you that money anymore. That entry is processed with the selling price of the item. Clear? Remember, I'm talking trading concern. What was the second part of the entry? The second part of the entry was to record the cost price of the item. And that one was a debit to trading stock, because the goods came back into our business, right? A debit to trading stock, and a credit to my cost of sales, because my cost of sales had to decrease. Now, using that information, or using that entry, let's now apply that to a manufacturing concern. Remember, you've supplied some goods, and they are returned by the customer, by whoever you've supplied the goods to. Think about it. Goods coming back into my finished goods stock account. So again, think about your trading stock account and link that knowledge with your finished goods stock account. A debit to finished goods. Why? The goods are coming back into my showroom. Okay? And obviously, you're going to credit your cost of sales. Therefore, the contra entry, a debit to finished goods and a credit to my cost of sales, which gives rise to this entry here. Number 3. Watch here. We've dealt with that one. Okay, let's just go back here. I just want to do one more thing with you. Right. Then, still with the finished goods stock account, if you are told the value of the goods, the finished goods on hand for the current year, I repeat, if you are given the value of your trading stock in terms of the finished goods stock, again, I'm using the term interchangeably, but remember we're dealing with the finished goods. If we are given the balance of my finished goods at the end of the year, right, then the missing figure would be your cost of sales. Very early on in the previous lesson, I alluded to the fact that you will derive your cost of sales figure. And where will it be derived? You will find it, or you will calculate it in your finished goods stock account. Because of the importance of this account, allow me to recap. 1, your balance at the beginning of the year, the goods on your shelves when you walked into your showroom. Number 2, the goods that were produced this year, right? Linking it to your work in process account, a debit to finished goods stock, a credit to work in process, and that's the value of the goods that were manufactured this year, right? Third one was the cost of sales. I've explained that. That would be the return of goods that were sold previously. Those goods came back into our finished goods stock account. Double entry, debit your finished goods stock, credit your cost of sales. Clear? Okay, and then if you are given the balance of your goods at the end of the current financial year, that means this year's goods, when you walked in on the last day of the financial year into your showroom, you found the goods there. That was the balance of the goods that were unsold this year. So therefore, your missing figure becomes your cost of sales. That means this year's cost of sales. Because obviously this year you had stock, you produced more, there were some returns, you got left over. The missing figure is this year's cost of sales. I hope this is crystal clear to you guys. Okay, we move on, and we've dealt with all of these. Remember, these that had to deal with the finished goods. The next one that we look at is your consumable stores stock. Okay, now, how do you deal with this account here? Obviously, if you're looking at your consumable store stock, again, I'm going to pick your brain and take you back to the adjustments that we did with a trading concern. Remember? And I'm going to illustrate by means of an example. Remember, if you have packing materials, if you walk into a superstore on the last day of the financial year and they have packing materials or any other consumable item left over, what do? You make an adjustment, don't you? You process an adjustment, don't you? Debit consumable store stock, credit your consumable stores. In other words, what are we saying? If this is my packing materials, and I had a balance of 1,000, right? And you can clearly see now that if there are some items left over at the end of the year, say there was 300 Rand left over, that credit of 300 indicates to you that you only used 700 Rand worth of packing materials. Okay? So therefore, in this account here, you can see that you need to know, one, what was my balance of my consumables at the beginning of the year, right? Then, what did I use? And the third component is, what is left over this year? So in that way, you are able to calculate the exact amount of consumables that were used in the current financial year. Got it? Okay, so now, keep this in mind, right? In your consumables, and generally the consumable stores refers to what we, in the cost accounting component, it refers to indirect materials. Remember we spoke about it, and we said in the making of the furniture, the adhesive or the nails or whatever was used, which you can't materials, and they could also be used in the selling and distribution. So obviously you'll have to apportion that cost as well, right? So once again, look at your stock of consumable stores, plus what you purchased, plus what you may have now again, I haven't given you all those transactions, right? I'm not going through all those transactions, but the same would apply to your stock account, where you buy for cash, you buy on credit, you return, whatever the case may be. Use that information with your consumable stores or your indirect materials. In other words, that's the stock that I had at the beginning of the year of consumables. I purchased more for cash or credit, I returned, and this is what I got left over. The amount that I have left over is then apportioned to the correct cost component, either a factory overhead cost or it went to selling and distribution, depending on how we used the materials that we had bought for that financial year. Okay, so now, if you look at the accounts that we've dealt with so far, number one, in our previous lesson, we dealt with the raw materials stock account. We then went on to the work in process, right? And we explained each of those in terms of how it is affected with the transactions. Okay, now remember something else. When we had our flow of information, we showed the external account moving into the cost component, and then finally being apportioned to the relevant account, whether it was work in process, and the three cost components that go into your work in process would obviously be your direct materials, your direct labor, and your factory overheads. Now, this consumable stores stock account, if you had used it only in the factory, that means the indirect materials were only used in the factory, then that entire amount that you calculate in the consumable stores account would be apportioned to your factory overheads. Clear? And once it's in your factory overheads, you will see it will then move into your work in process account. So clearly you can see that the information moves from the external account, namely consumable stores. You then transfer to your cost component, namely your factory overheads, and from there you move it over into your work in process account. Okay guys, so this, what we've done today are the ledger accounts. There are more ledger accounts that we have to deal with, and if you want to know more, you have to stay with us. We'll take a quick ad break and see you in a jiffy. welcome back, accounting boffins. Remember, we said we're going on to the other cost accounts, and we're going to show you once again the flow of information. And that is important, because remember, when we go on to the actual activities, you're going to have to remember this to understand what's going to come back to you at a later stage. So for now, it's the cost accounting, and we're looking at your direct material cost. Once again, think about what we've done previously. From your raw material stock account, you transferred into your direct materials cost. Can you remember? And we said that that was your internal transfer. Now, from your direct materials account, okay, the direct materials cost account, that is, you're transferring into the work in process. If you remember the work in process account, you had an entry on the debit side. This is the transfer, taking the item from your cost account into your work in process. Okay. The next one that we look at is our direct labor cost. Again, the external account would be your salaries and wages. Okay? From your salaries and wages, you transfer to the correct cost component. In this case here, direct labor. Let's once just stop here with the direct labor, because I want you to see something that's may appear odd to you, but I want to explain it so you understand it. So, in your direct labor, you've got your factory wages, which is you okay with, you know that, but you also have medical aid contribution. Now that one is important. Why? Because other than the wages and salaries that are paid to your employees that are working in the factory, in the production process, you may also have contributions where the employer contributes on behalf of those employees. And that cost has to be part and parcel of your direct labor. Very, very, very important. Watch out for that when you're doing activities or you're working through exam papers. So in other words, the employer's contributions on behalf of the employees that are directly involved in the manufacturing process, that cost component will impact directly on my direct labor. Right, so now that you've got your direct labor, what happens to direct labor? Direct labor now will be transferred to your work in process. There we go. So, you've taken your materials, you've taken your direct labor into your work in process account. Okay. The next one that we look at is the factory overhead cost component. Now here, accounting boffins, you have to take each cost component, right? In other words, your factory maintenance, there we go, your factory electricity, your factory rent, your depreciation of your factory equipment. In this particular cost component, namely your factory overheads, you only bring in the cost of the factory. So if you are given the total cost of the rental, you must apportion it in terms of whatever information you have. In other words, if you are told that the factory occupies 50% of the floor space, then whatever amount you've paid, 50% of that will go into my factory overheads. And yes, this particular one will involve a lot of calculations. Because remember, just to give you another example, if you are given the total insurance for the premises, right? So, insurance for the entire premises. Can you take the entire insurance as is into your factory overheads? Certainly not. The insurance must be apportioned. The factory will get its portion, the selling and distribution its portion, and the admin section its portion of the insurance. So in this way, you can see that all your expenses that deal directly with the factory will go into your factory overhead cost account. Now be careful. In your factory overheads, if you put in something that doesn't belong to the factory, it is regarded as a foreign item. And a foreign item carries a penalty. So anything that has the word factory attached to it is indicating to you that that expense is in respect of the factory. Once you've accumulated all your expenses in your factory overheads cost account, then definitely what do? We transfer that into my work in process, and notice what happens. Your cost account closes, right? So all your cost accounts, your direct labor, your direct material, and your factory overheads are transferred into your work in process stock account. That is important. Why? Because those three cost components deal with the manufacturing of that particular product. I hope it's crystal clear to you. Right. Now we come to the administration cost. Again, all the cost components that deal with the admin section of our premises. When you're doing the section on cost accounting, imagine your building, right? And broken up into the three sections. One section is the factory where the production takes place. The other part of the building is your showroom where you are displaying your items and selling your finished goods. And the third component of the premises would be your admin section where all the administrative work is being completed. So by the same token, you would now take all your admin costs, right, and transfer them into your administration cost account, okay? So here we had maintenance, electricity, rent, depreciation, and remember we said about consumable stores that it may be possible that some of the consumables that you are using are being used by the admin section. So therefore, transfer that component into your administration cost account. Okay, right. Once you've accumulated all of them here in your administration cost account, note the difference. Note and take particular note of this here. Where do we transfer this account to? Where do we close off the administration cost account to? Not to work in process. I repeat, not to work in process. Why? The admin section has absolutely nothing to do with the production process. And therefore, you close off that administration cost component into profit and loss. Clear, guys? So remember, if you put an admin cost into your work in process, negative marking, it's a foreign item. If you put an admin cost into your factory overheads, there again, it will be marked not only wrong, but will be marked with a penalty because it is not supposed to be there. Okay? So admin is done. We now come to selling and distribution. Your focus now is the showroom, right? They must have their rental apportioned. There we go. They are also using electricity, so that component will go there. There was maintenance done on that section. There's your maintenance. Remember, your selling and distribution uses vehicles. The reps that are working in that section are going out using vehicles. So the depreciation on those vehicles will be part of your selling and distribution cost. Notice again, we also have the consumable stores there. That means some of the consumables that we bought are also applicable to the showroom. So therefore, they constitute part of your selling and distribution cost account. So in this way, what have you done? you have accumulated all the costs that are relative to the selling and distribution, to the showroom, dealing with the selling of the item. You've collected them into one account, namely your selling and distribution. Okay, now what happens to it from there? Do we transfer the selling and distribution into my work in process? No, not at all. Once again, remember that selling and distribution has absolutely nothing to do with the production of my item. It's the selling component of it, and therefore that will go into my profit and loss. As you can see, the three cost components, namely direct material, direct labor, and your factory overheads, went into your work in process, and your admin cost and your selling and distribution cost went into your profit and loss. Okay. So that is done, that is done. The next account that we deal with is your trading account. Here again, draw on your previous knowledge, namely, you've got your sales, goods that you have sold. Remember, the cost of sales was derived from where? From my finished goods account. You can recall that, okay? And then obviously, the difference between your sales and your cost of sales is what you take into your profit and loss account. So once again, look at the flow of information. I've shown you from the start, taking you step by step into the process, so you have now a bigger picture and a better understanding of cost accounts. So this is your profit, your trading account, which you've brought in your sales and your cost of sales. In other words, the two trading accounts that deal with selling, obviously your sales, and the cost of sales. But a special note on the cost of sales. It was a figure that we derived. It was a figure that we calculated in our finished goods stock account. I hope you remember that. Okay. Finally, we have the profit and loss account. And in my profit and loss account now, you can see I've brought in my profit from my trading account. Can you see the contra entry? Let me show it to you once again. You debit your trading account. There's your detail, profit and loss. And therefore, you credit your profit and loss account. There's my contra entry. Now, in my profit and loss account, do you remember the two cost components that we transferred? Certainly you should. What are they? Selling and distribution and admin cost. Notice, nothing to do with production. Clear? Therefore, if you now bring in a production cost into the profit and loss account, definitely it will not only be marked wrong, but it will also carry a negative, because you will be penalized for bringing in a foreign item. Clear? Okay, so in this case here now, in my profit and loss account, I've got my selling and distribution and my admin cost, and the difference would be my net profit, which I transfer into my capital account. So in this way, you've seen the flow of information. All the accounts have been explained to you, and you can now see the complete picture. Guys, we still have unit cost to deal with. So if you want to know about unit cost, stay with us, because we're going to make sure that you understand the unit cost calculations, and it's very, very important for the exams. So take a quick break. We're going for an ad break. We'll see you just now. Welcome back, accounting boffins. Right? Remember we said we're going to go through the unit cost concepts, but before we do that, let's just go through some of the theory, some of the concepts that we've discussed already, just to refresh our memories so we know exactly what we're talking about. Okay, so in terms of our terminology, when we talk about direct material costs, what are we referring to? We're talking about the materials that we used in the manufacturing process, the direct materials that were used in the process of production. Okay, Then your direct labor, it would obviously be your salaries and wages of employees involved in the direct manufacture of the product. And the word there to take note of is the direct, because those are the people working in the making of the product. Okay. So if you look at total cost of production, what are we looking at? It will be your primary cost. A new word. What do we mean by primary cost? By primary cost, we mean direct material plus direct labor. Those two costs together will give you your primary cost. Okay, then obviously you add it to your factory overheads, and that will then give you your total cost of production. Right, now, just to take you through this here, once again, when we talk about the opening stock of work in process, we mentioned when we walk into a factory at the beginning of the year, there are some goods that are in semi-state of completion. In other words, they're not completely manufactured, right? That would be unfinished items at the beginning of the financial period. Okay, then we go to the closing stock of work in process. By the same token, when you walk in at the end of the year, there are some goods that have not been completely manufactured. They are unfinished, they're in semi-state of completion. Therefore, they would be your unfinished items at the end of the financial year. Okay, and then finally, your finished goods would be the completed items that you produced during this period. Okay, so finished goods are those goods that were produced, completely produced, ready for sale. So those are the goods that we have completely manufactured this financial year. Right, now we're looking at an example. If you are asked to calculate the direct material cost per unit, now look at the difference. You're asked to calculate the direct material cost per unit. That means how much of material was used in 1 unit of production. You are told you're working with the flag factory and we produced 1,200 flags during the year, right? And we are asked to calculate the direct material cost. So all that we do is we go to our direct material cost, which was 10,000 Rand, okay? And there's my 10,000 Rand. Firstly, the indicator is direct material cost over total number of units produced. As you can see, I've shown you the direct material cost was 10,000 Rand. We produced 1,200 items to give me a value of 8 Rand and 33 cents. In other words, what amount of material went into making 1 flag? And that's the important part. So, direct material cost per unit would be 8 Rand 33. Okay, now we're asked to work out the direct labor cost per unit. What do? You go and identify your direct labor. Here we go. There's my direct labor. It cost me 12,000 Rand. So you're using it from information that's provided to you. Okay, what do we do here? There's my direct labor. I take my direct labor cost, which I showed you was 12,000, right? I think there's a zero missing there, but we're going to put it in for you. There's the 12,000. You can see it now, divided by 1,200 units that were produced, therefore giving you a direct labor cost per unit of 10 Rand. In other words, the question is asking you how much of labor went into making 1 flag. And that's why we call it direct labor cost per unit. Okay, therefore the cost on this one would be the 10 Rand. Okay, next one is your direct cost per unit. Once again, what do we mean by direct cost? Direct cost would be material plus labor. I repeat, material plus labor. Those are your direct costs. What's my direct cost here? Material plus labor will give me a figure of 22,000. Therefore, there's my 22,000. So you need to identify this, people, and you need to know this, accounting students. When the question says direct cost, they're not telling you it's material and labor. You need to know when they're talking about direct cost, they're talking about material plus labor. Remember, we also refer to it as your primary cost. Okay, good. So we have our primary cost, our direct cost of 22,000 divided by the number of units produced. That means the total unit cost in terms of direct cost, which was material and labor, will give you a figure of 18 Rand and 33 cents. If you recall the previous two calculations, the one was 8 Rand 33 and the other was 10 Rand. Added together, 18 Rand and 33 cents. Okay. If you look at your factory overhead cost per unit, immediately we go, identify our factory overheads cost, which is 16,000, right? We've identified it, put it at the top, because you're going to take that 16,000 divided by the number of units produced, which was 1,200, and therefore you can see that your factory overheads cost component is 13 Rand and 33 cents. So what are you doing? You're taking your factory overheads cost as your numerator, you're dividing it by the number of units that you have produced, and that will then give you your factory overhead cost per unit. In other words, if you are asked how much of factory overheads went into one unit, into one flag, you can clearly see your answer is 13 Rand and 33 cents. Okay, the next one we look at is the cost of finished goods per unit. Okay, now here again, you look at your information that's given to you, identify your finished goods, which was 38,000. That was your cost of finished goods that you produced. Okay, and what do we do with it? We take our 38,000 and we divide it by the number of units that we have produced, which was 1,200, to give me a total cost of 31 Rand and 67 cents. So that is the cost of manufacturing one flag. How much? 31 Rand and 67 cents. Now, obviously, guys, you can see that all of this information is dependent on getting your costing done correctly. So, your ledger accounts, your cost accounts, and from that, we have extracted this information, and we're now doing the unit cost calculations. Okay. If you look at your selling and distribution cost per unit, once again, go and identify, right? You will find that your selling and unit cost per distribution, you'd obviously extract your selling and distribution cost, divided by number of units produced will give you an amount of 5 Rand. That means the selling cost per unit, the selling and distribution cost per unit amounted to 5 Rand. What is important for you to note is that if they're asking for selling and distribution cost per unit, you immediately find your selling and distribution cost divided by the total number of units that was sold, right? And that will then give you your selling and distribution cost per unit. Okay. If you're looking at your variable cost per unit, once again, you now have to identify your variable costs. Which are your variable costs? Now, this is where, remember we spoke about fixed and variable? You must now identify which are your variable costs. Remember, my variable costs are those costs that vary with the levels of production. And they are direct material, direct labor, and selling and distribution. The more you produce, the more you're going to sell. So clearly, your selling costs are going to change as well. So what do we do here? We find it's your direct material cost per unit, remember, direct labor cost per unit, and your selling and distribution cost per unit. Can you see that? And this is important, because if you don't know your variable cost, you're going to bring in the wrong cost component, and we don't want that to happen. So make sure you know that your variable costs are material, labor, and selling and distribution. Okay, so obviously you add that all up and it gives you an amount of 23 Rand and 33 cents, and that will be your variable cost per unit. Okay, if you're looking at your contribution per unit, now what do we mean by contribution per unit? This is important, guys. Your contribution per unit is your selling price per unit minus your variable cost per unit. of extreme importance. You must know this calculation. You're going to see why. It's going to lead into the next calculation. Okay, so here we go. It's your selling price per unit minus your variable cost per unit. In other words, what do we take? We take our okay, here we go. Our contribution per unit is your selling price per unit, which was 60 Rand, minus your variable cost per unit, which was 23 Rand and 33 cents, and it gave you a contribution per unit of 36.67. Right. Now, where do we use this contribution per unit? Okay. Before we go on to the usage, let's just recap this particular one because of its importance. Your contribution per unit will be your selling price per unit less your variable cost per unit. This would then give you a figure of 36 Rand and 67 cents. Okay, now we come to the very, very important unit cost, and it's called your break-even point. So even before we even go into the calculation, let us first understand what is the break-even point. The break-even point is the point at which the enterprise breaks even. In other words, at that point, when you reach that point of production, you have neither made a profit nor have you made a loss. It's at that point where your profit and loss is equal to 0. The moment you produce above the break-even point, you're now making a profit. And if you produce below the break-even point, you're making a loss. Keep that in mind. And it's a very, very important indicator to any enterprise, because they want to know how many units must we produce in order to reach the break-even point. So obviously, every manufacturing enterprise, their ideal would be to produce well above the break-even point in order to generate a profit. Clear? So, how do we do this calculation? And this calculation, like I said, we left the best for last. It's a very, very important calculation. So therefore, you take your total fixed costs, and that is taken in rands, right? You take it in rand value. So let's identify our fixed costs. What are our fixed costs? Our fixed costs, we said, will be factory overheads plus our admin costs, right? And I don't think we have our admin costs because obviously this information is here. But anyway, obviously it would mean that the admin cost would be, if this one here was, let's just identify 16,000. So obviously the admin cost had to be 9,000. So 16 plus 9 is 25. So I'm just going to put here the admin cost amounted to 9,000 Rand. So what are we saying? Total fixed costs in rands would be, you take your fixed cost, namely your factory overheads, plus your admin cost. Can you see? Once again, your knowledge of the fixed cost is important. You don't include your variables. It's only your fixed cost. And what do we know about fixed cost? They remain fixed, immaterial of the levels of production. Therefore, fixed cost would be my factory overheads plus my admin cost. So 16 plus 9 will give me the 25,000, which is my rand value of my fixed cost. What do I divide it by? And that's the important part. I divide it by my contribution per unit. Remember, we worked it out just now. Let me take you back there. Remember, there it is, 36.67. Therefore, divided by 36.67. Now notice something very, very important here. Your answer to this indicator will be the number of units that you have to produce in order to break even. And in this particular case, we know that if we want to break even in this factory of ours, we need to produce a minimum of 682 units. But obviously, it will be the dream of every enterprise to produce way above the break-even point so that we can generate a profit from our activities. The moment we produce below the break-even point, it's a loss to the factory. It means we haven't even covered our cost, and that's what we mean by the break-even point. Okay, guys, let us summarize what we've done so far in our cost accounting. We've dealt with all the ledger accounts, we've dealt with the cost accounts, and we've dealt with the cost component calculations. All right? This is the basis of your cost accounting. I'm sure you are excited about it, and you want to actually start doing questions on it, and that's the way to go. So from me and my team, we wish you well in preparing this section of cost accounting. What do we say? Aim for the stars. And perchance, if you miss, you're going to land on the moon, and you're going to be a shining star. Until the next time, be good. Goodbye.